Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, traders and investors. Welcome to this Thursday edition of Benzinga's PreMarket Prep. I'm Spencer Israel here with Joel Elconin and Dennis Dick. Got a jam-packed show today. A few guests for you. At 8:15, we're going to be joined by Michael DeMoth. He's the founder of ChartYourTrade.com. At 8:35, we're going to be joined by Brad Thomas. He's the editor of the Forbes Real Estate Investor at REITinvestor.com. But before we talk to them and before we get to anything, we have Sean Udall on, who's actually on with us right now. He's going to talk about Twitter, and I'm going to let Joel handle that. So, Joel, get us through the S&Ps and gold and oil, and then we'll get right to Twitter, and we'll get right to Sean.
All right, S&Ps poked their head above that 95 even level, 96 and a quarter. That's the key to more upside. Crude trading up 46 cents, 52.80, and gold and silver continuing their rally. Well, now we have on the line the master of the Twitter disaster, Sean Udall. Sean, how you doing? And thanks for joining us.
Hey, I'm good. I'd like to say I'm powerful enough to be the master of the Twitter disaster, and maybe someday. But no, I don't think I can take credit for Twitter's bad numbers here today.
All right.
You aren't tweeting enough, Sean. You got to start tweeting more.
Yeah. No, I mean, here, so getting down to the brass tacks, I mean, and I think Joel has heard, I don't know if we said this on air. I think we maybe have chatted about this. You know, there's this big expectation that Trump is going to have this big and profound impact on Twitter. And he's going to drive a massive amount of increase in monthly active users and blah, 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 blah. Well, I mean, I've pretty much been saying I don't see much of an impact on Trump. Like, in other words, the market maybe had a Trump bump. I've sort of said all along, I just don't really think that Trump's going to drive incremental MAUs and certainly not going to drive incremental advertising revenue for the platform last quarter. Now, could that change, and could the fact that Trump spent 1/10 or 1/8 on a presidential election than his opponent and won largely because of Twitter, could that be a very long-tailed, sticky effect? By the way, Twitter caught a downgrade or an upgrade from BTIG yesterday.
But they were citing
and
Trump.
By and large, but see, they also said they didn't necessarily say that numbers were going to be good this quarter, right? They kind of said the same thing. They kind of said that this could engender more of a long tail effect, right? The power of the platform will get recognized over time. The DAU numbers will get stickier over time and keep growing. By the way, daily active users were up 11%. That's probably the only thing that the bulls can sort of hang their hat on in the numbers today on Twitter. But I think if you just think about the power of the platform, and you think about the problems that we've talked about, Twitter hasn't really changed. So the power of the platform hasn't changed. The reach is far, far in excess of the 300 million daily active, or whatever it is now, 312 million. I mean, Twitter reaches roughly 1 to 1.5 billion users a day. I'm kind of ballparking that number. It's probably like 1.2 or 1.3 billion. So their reach is far in excess of the user number, but here's the problem. They don't have that slide. I've been harping now, even on your guys' show. I've been writing about it for 3 years. On your show, I've been talking about it for 18 months. They have to get off of getting on the platform and having to find users and have it be a user account only generated platform. By the way, the big data licensors of Twitter don't use Twitter that way. The big data licensees of Twitter are analyzing terms and tweets and hashtags and basically subjects, right? They're honing in on stock symbols, subjects, sentiment changes, things like that. They're not honing in on user accounts. So the real power of the platform is what's being talked about on Twitter. It's not figuring out, hey, what 1,000 user accounts should I follow? So I think if Twitter just could again have an awakening and realize that they need an onboarding process where people can follow interests, a subject graph and an interest graph, and not have to figure out what user accounts to follow, this thing it still has a chance to be a massive, massive product. If they kind of stick to this user account only thesis, it's probably going to be, they could get to 400 million, monthly active users or something, but it's just going to be hard to be a $100 billion market cap company if they don't change the paradigm. So, and then just simple things. One of the things, just simple things like they don't have a menu for Twitter Live. So they have Twitter Live and they promote Twitter Live, but there's nowhere on here. I've never been able to click and find, again, when we're watching TV, there's a channel guide, right? Well, if Twitter's going to live stream and have all these great video events, we need a menu. They got to have a menu. So here's the funny thing. I think everybody, like the bears, are going to be totally empowered today. They're going to say, "Oh, Twitter's dead. Dorsey's dead. Blah 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 blah." You know what? I still think that Twitter doesn't really need to change that much, but they do need to change 2 or 3 very critical things in very specific ways. And the whole usage experience and the power of the platform and everything magnifies. Until they do that, I don't know. By the way, I will say,
Sean, let's let Dennis. Sean, we're up against the clock a little bit. Let's let Dennis go here with his argument, and then we got a lot of other things to cover. But Dennis, I'll let you
go.
I just want to say. So, obviously here I've been concerned for a while. It's a valuation issue for me for Twitter. I personally love Twitter. I use it every day. It's one of the first things I do in the morning. I think the people who use it love it. The people who get it, love it. And if you are into the stock market, I think it's a great tool. If you're into sports, I think it's a lot of fun too. The problem is so many people get on Twitter and then they don't know what to do. People signed up for an initial account and they don't know what to do. That's what all my friends tell me. They come on, okay, what do I do now? I've signed up for Twitter, but I don't know what to do. I don't know. Do I follow people? When I tweet something, nobody else sees it because I don't have any followers. It's very difficult to get started with Twitter. And isn't that, maybe one of their major issues that they never really addressed? They tried to address it, by giving you suggestions and doing different things, but it's a confusing platform when you first get started with it. Like, what are your thoughts to that, Sean?
Well, you're kind of reiterating in a different way exactly what I just said, right? Maybe I didn't say it clear. Okay, so this is what I talk about. If you go on to Flipboard or Zeit or Apple News, you don't follow user accounts. You follow your subjects of your primary interests, right? That's how people need to be able to follow Twitter. Excuse me, especially new people. So put it this way, Twitter's a marathon, not a sprint. The only way to get good at Twitter is you kind of have to devote like a large part of your life for about 3 months to figure it out. Yeah. Guess what? Most people aren't going to do that, right? Only us freaky, weird people that need access to information all during the day because we have a discipline that we follow that we care deeply about, right? There's just, again, what's the population of people?
Okay,
like
one final question. Do you like it in the lower 16s here, or are you just going to wait for the dust to settle? A lot of support here.
Yeah, that was actually going to be my main point. I mean, everybody berates Twitter, but if you've been trading this stock and you've been buying it sort of, let's say, in the high 14, low 15s to low 16s, and then every time it gives you that run, and there's been plenty of runs. I mean, I've easily made 15, 20, 25 points trading Twitter. I mean, 2 times 10 is 20. Okay, so if the next year is the same, there will be 10 or 11 or 12 $2.2 trades on Twitter. You don't have to time them perfect. But yeah, no, 16, 20 or below. That's kind of my level. 16, 20 or below, 15, 50 is even better.
All right, we'll leave you with that. Sean Udall of the Tech Stock Strategist breaking down Twitter. Thanks a lot, Sean.
Thanks, guys. Take care.
Thanks, Sean. Appreciate it.
All right, Dennis, I'm just going to give the pre-market low of 16.53. The yearly low was right in that area, 16.21, 16.22. But they're going to let the dust settle, see if we can hold the lower 16s.
But Spencer, can we get the numbers for Twitter, because we never actually jumped into the numbers here? Let's get to actual, what the issues are, because somebody just waking up here might be like, okay, well,
Sure.
why actually is the stock trading down? And it was
Sure.
revenue and it was guidance. And what were
All
those
right, so
numbers?
they actually beat on the Q4 adjusted EPS, 16 cents versus 12 cents. Not bad. Sales, they missed big, 717 million versus 740 million, so that's a big miss. They do see Q1 adjusted EBITDA of 75 to 95 million dollars, and fiscal year 17 capex at 300 to 400 million dollars. Dennis, the number I was telling you on the pre-market show, I don't think that was right. I think that was a mistake.
Okay.
With regards to them cutting their guidance by like half. I don't know about that. But then I also want to say that Q4 average MAUs, average MAUs up 4% year over year, and average DAUs, which is daily active users, 11% up year over year. But it was the slowest quarter of growth in those areas.
That's the main issue here. Growth has been an issue, and when you carry a valuation and just quick do a multiple, even if you want. Let's say optimistically they can make 60 or 70 cents if you want to just look at from earnings. Well, if the stock's trading up at $18, it's at 16 now. You're trading with a multiple of 25 to 30, and you're not growing much. That means it's still expensive here. Just if I'm looking just from a pure valuation perspective, Wall Street wants to see growth. We're not seeing it here in Twitter anymore, and that's the issue. Do I like it in the lower teens? Like, I've played it a few times from the long side. I've been very lucky. I should become a Twitter trader, because I've been very lucky on this one too. I bought it at 14, I wrote it up to 18, and I rebought it down at like 18, and I wrote it up to 22 when the rumors were there. I've actually had a lot of luck trading this stock here, and I've been bearish the whole time too, but I played it from the long side. Just like Sean said, you get some bounces on there, and if you time them right, there's going to be rumors. There's going to be different times where it can bounce here. I love it down at that 14 level, but at 3.1682, I feel like it's still a little bit in the middle of nowhere, and I still feel like it's expensive, and that's why I'm not jumping in hand over fist today to buy Twitter on a 10% pullback.
All right, a lot of lows in the low 16s. We'll see if we test it today.
Yep, big level.
Our second,
that's the first level.
What should be our second stock of the day? This is Benzinga's pre-market prep brought to
Let's
you
go
by
Tesla.
Twitter.
Let's talk Tesla. We should bring Sean back on to talk Tesla, but I'm going to say leave him on there. Tesla here is trading up again this morning. I'll tell you, I have no idea. You can throw all my valuation stuff that I just talked about Twitter out the window with Tesla. You can't even analyze this from valuation anymore, because Tesla trades with such a ridiculous valuation. Don't even worry about valuation with this. I mean, in perspective, Tesla, and it's been an incredible run here. So I'm done trying to trade Tesla or trying to, be bearish on Tesla, because it just does whatever the hell it wants to do. It's just numbers here now. You can't look at this from an analyst perspective and figure out what the hell the company's worth. It's trading with a market cap like $42 billion. Ford's market cap is $49 billion. I see a Ford in every one of my driveways in my subdivision. I think there's 3 Teslas in my city. It makes absolutely zero sense to me that this company can be worth just as much as Ford, especially, Ford dividend, the value play. But, that's what this market is. Sometimes it's a 0 cents market. And we always say market can stay irrational much longer. You can stay solvent. So I'm not going to be trying this from the short side. I thought it would stall at 240. I thought it would stall at 250. I think they're 270 here now. So I have no idea. Maybe look at the old highs. Joel will give you some levels. Maybe he can trade Tesla better than I can.
No, I don't.
I'm sitting on my hands. I'm putting Tesla on my restricted list for trading, because it makes no sense from valuation, and I can't, trade something that I can't make sense of.
In Tesla's defense, I don't know how great their cars are in like off-road situations, and I know where you live, Dennis. There's like no roads, so there's like no pavement. So
I live
I
30 minutes
think
north of Spencer.
I think that could be the reason why you don't have any
Makes fun of me
Teslas
'cause I'm Canadian.
in your town. Anyway, the news is that Elon Musk tweeted about entering the India market. And also, late last night, we had a Reuters report that they're shutting down production at their California plant for 1 week in preparation for production of the Model 3 sedan.
Shocker that Elon Musk tweets and the stock goes up. How many times does he do that too? He's manipulative to his own stock even. I am just done Tesla. I cannot trade this thing. Joel, give us a level here.
I'll just tell you, pre-market high, 275 right on the kisser. Old all-time high, I think, may come into play. That's 272 even. That was made, when was that made? A long time ago. In August of 2014, we're below it now. So I'd keep an eye on that. Double dose, good move. I mean, look at the daily chart on this one. This one is a monster. So 272 and then 275 are the levels. We get one more earnings report in here, Dennis, before we bring in our second guest of the day.
Sure. Let's jump over to Coca-Cola. So we're going right to the opposite end of the spectrum here from, your crazy valuations to your deep value stocks. And Coke's trading down $1 here in the pre-market. Coke is my kind of stock. I like trading Coke. It's, a lot more predictable. It trades from valuation. I like trading from a valuation perspective. Anyways, how did Coke do? Obviously, they didn't do anything great because stock's trading down 2%. But Spencer, give us a KO number.
Well, the Q4 adjusted EPS was 37 cents. That's in line. Sales 9.4 versus $9.13 billion is the estimate. So that was good. They do see fiscal year 17 organic sales growth at around 3%, and the fiscal year 17 adjusted EPS down 1 to 4% year over year.
Coke in the low 40s is usually a bounce level. I mean, if this thing, gets all crazy and gets down to low like 40, and you can see the low we got back in December, we just breached 40.3988. You look at the thing, it's got a dividend here. I'm trying to grab the dividend of 3.39%. So if it gets down the lower, it just becomes a value play. And I think 40 is a decent level for Coke.
Yeah, it got hit in the pre-market trading. You got a pre-market low, 41.06. We'll see what happens here. Dennis mentioned the lower 40s. Just a real big standard deviation move here for Coke to be down $1. But as in Gilead yesterday, it always it doesn't pay to try and buy this thing off the opening bell. All right, a minute late here at 8:16, and we're going to bring in our second guest of the day, Michael Lamoth. He's the founder of ChartYourTrade.com. We'll be right back with Michael.
Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need Thinkorswim. To experience everything Thinkorswim has to offer, open a TD Ameritrade account today. Thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks.
Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by Benzinga Pro. We are on the line with Michael Lamoth. He's the founder of ChartYourTrade.com. Michael, how you doing on this busy Thursday morning?
Pretty good, thanks. How are you guys doing?
We're having fun here, making fun of Twitter and trying to figure out Tesla. But main reason we have you on is you're going to be at the FinTech Awards coming up here in May. And tell us what category you applied for and what's your product?
Sure. So I applied for the research tools and apps. What we developed was a stock scanning tool called Chart Your Trade MRI. And what this tool does, it searches for the high growth stocks, the best high growth stocks in the market. And well, the way that it does this is it runs 8 different scans, 65 different growth criteria, earnings, sales, high relative strength, everything like that. And then what's unique about it is that it overlays what I call an ideal growth stock screen that the end user could set to pass whatever percentage it wants, and then it filters down even further and gives the end user anywhere from, say, 12 stocks to focus on a given week, or if they expand that ideal screen, they could have anywhere to 100 or so stocks to focus on. And doing that kind of screening before, though, we invented this, used to take me a couple hours on a weekend. Now it's drilled down to click a button, here's your stocks, and It's great for finding winners, for analyzing market health, and a number of other things.
Okay. Marv in the chat asked about PayPal here. Do you think the money laundering probe will kill the stock? And you were nice enough to put a chart in here, a little bit peek at your product here. I just put the chart up on the screen here. Tell us what we're looking at and what to look forward to.
All right. So with PayPal, I was just answering that question. PayPal had passed a little while ago. It's no longer on the screens, and it was setting up in a halfway decent pace between October and the middle of January. It looked like it was rounding out a nice cup-shaped base, and then it started to fall apart towards the end of January when it had that big reversal on the weekly bar. And since then, it's just kind of been bouncing around between that 40-week line now, about $41 a share. And it really looks like it needs a little bit more time to set up some kind of a tradable pattern here.
All right, Tesla in the news here. You also put a chart in there. I mean, up in the stratosphere here. Give us your comments on Tesla here, trading up sharply in the pre-market.
Yes, Tesla's been fantastic. It's been fantastic for anybody that bought it as it started to break back above the 200-day line, that black line, if you're looking at the chart in the chat room. And most recently, it looks like it's been getting a lot of support right around the 10-day exponential moving average. If you're looking at the chart, it's that green line. And it between January 25th and February 3rd, it made a nice little consolidation that people would be able to trade against. And the time to get in it for me would have been February 6th, as it started to break above that little resistance zone right around 252 to 255, and I'd want it to continue getting support right around that 10-day exponential moving average as it's been.
Mike Dennis Dick here. Just wanted to ask you, because we only got it here for about 2-3 more minutes here. So just want to get a couple stock picks from you because obviously, you're looking at a lot of charts, you're running these scans here. What do you like from the growth area here? What stocks do you like right now? Where do you see some value?
Sure. So one stock that's been on the radar is CHKP, Checkpoint Software.
Yep.
They're part of the cybersecurity space. If you want to also take a look at the ETF that tracks that, hack, we see that's been consolidating for a little while and it's starting to break out. The CHKP is a leader in the space. It's recently formed, what looks like a pennant, and it's starting to break out. So I'd like if it could get above and hold above 100, I'd like to see that one continue to run. The financial sector has been doing well since the election. It's been consolidating over the past, how many weeks here? Really since the beginning of December, it's just been trading sideways. And there's a number of stocks that are in that space as well that seem poised to break out if the sector could break out. Some of them are Bank of America. Another one is Meridian Bank Corp, which is ticker EBSB. That has been consolidating right around the 50-day moving average and looks like it could pop above short-term resistance at 1910. If it does, I think that it could get going here.
And anything you're avoiding here in this raging bull market?
Anything I'm avoiding? You guys spoke about Twitter earlier. That's not something that I would be trading. Just because I like to buy bullish stocks in a bullish environment, and something like Twitter that's just been in a downtrend for a couple of years now. That's not really something that that I would be interested in. I want to see. I like to see a stock start to build a base and start to have some kind of a positive movement before I start to get into it. And after it forms that consolidation, then I'll try to play the breakout.
You like it going from left to right instead of right to left. Before we let you go, just overall,
Pretty much.
overall thoughts on the market before we let you go.
Overall thought on the market, it's been fantastic. We're near all-time highs, and we continue to break into all-time highs until the market proves that it's tapping out. I'm long, and it's been given no signs of breaking down just yet. So I'm long, and I'm staying long until proven otherwise.
Michael Lamont, founder of ChartYourTrade.com. He'll be at the FinTech Awards. Thanks a lot, Michael.
Thanks a lot for having me on. Always a pleasure.
Okay.
All right, 8:26. I want to get to some more earnings because we've covered before, aside from Michael, we've covered 2 stocks today. So I want to get to a few more. Excuse me. Let's do Kellogg. Let's do Kellogg reported Q4 adjusted EPS 92 cents versus 85 cents. Revenue 3.1 billion versus 3.08 billion. So they beat on both. Joel, give us a technical look at K.
Okay. Battle Creek, Michigan company here. Let's take a look at it in the pre-market trading before nice spike up to 75, but right back down here. A stable stock here. Had a big run back in, when was that? In November, December. That 75 spike, I don't know if that took place on any volume.
It was after hours.
Oh, yeah.
200 shares. Somebody got excited.
All right.
I would have sold it if I could have.
All right. I will look at the pair of highs at 74.14, 74.16. That's where we're trading now. Hold that continued upside. If not, I think we back and fill a little bit. The close at 73.59. Any comments on Kellogg?
It's lower beta stock. I mean, this thing moves $1 off its earnings in any direction here, so not too much comments on Kellogg's. But there's some other big movers here too. We had some major news, Regeneron last night, and then we had Regeneron earnings here this morning. So we got the whole Regeneron Amgen saga that has been going on. And Spencer, do you have the details? I believe there was an appeal last night filed by Regeneron because they're over this patent issue.
I do have it. So we have a Court of Appeals in the Regeneron Sanofi Amgen case issued an order granting an emergency motion to stay the pending appeal, a stay order, and that is followed by a halt. And that went, this is after the bail yesterday, so they confirmed after the bail that Regeneron did, that the court granted this stay, a permanent injunction, and then shares resumed trading like an hour or 15 minutes after the original.
Traded up to 365, and we were trading up significantly last night. And then we had earnings this morning, though, from Regeneron, which knocked it down. What the earnings report say?
Q4 adjusted EPS $3.04. That's a beat by a penny. Sales of $1.227 billion versus 1.3, so a slight miss there.
So we got up to 365, and now we're trading down to 346. So it's been a wild after-hours session for REGN. Joel, break down these technicals for us.
This is all over the map here, but I'm looking under 345 here, and I see four higher lows. So you had a step-up buyer from 340.09 up to 340.350. So that's my first area I'd be looking of support here. I mean, it's been all over the map, a wild child, but rather start nibbling under 345 than at this level.
Couple other stocks here just reporting last night. We had Whole Foods, and this one was pretty wild here too. But it seems like this Whole Foods, no matter what they say, it bounces at 28. I mean, this is just the level of all levels. We were talking about every quarter we talk about this 28 level, and every quarter it gets down there and it bounces. So disappointing results here, but it ends up bouncing here again. Spencer, Whole Foods.
Whole Foods Q1 EPS 30 cents versus 39 cents, so a miss. Revenue 4.9 billion versus 4.98 billion, and then Q1 comps down 4.2%.
Ugly.
Fiscal year 17 Fiscal year 17 EPS at $1.33 and sales growth of 1.5% or greater.
Everything ugly. Everything ugly at Whole Foods, but it gets a pass every time because it's sold off. Where did it sell off to? Just under $28 and bounces at the same level that it always bounces at. It's like this is just learned behavior here now. In the last year and a half, if you buy Whole Foods at 28, you make money, and everybody just jumps in no matter what the hell goes on with Whole Foods, even though the company is kind of in disaster mode here right now. Anyways, it bounced again here. So I guess until you get a print of 27, and that will resume the downtrend, I guess you kids keep doing it. You buy at 28, you sell at 30 because it keeps working.
Pre-market low 27.51 is Dennis just mentioned. If you were hanging out at 27.67, the lower the low of the move back in September, you got a nice fill back up here in the $29 handle. Buyers will be stepping in now. I don't think you're going to see that pre-market low. Yesterday, this thing had a big range yesterday. At the close, 29.30. I'm sure a lot of people like to get out at the mark because that was 11 cents from the high of the day.
That's just a huge level. So we'll keep going with the 28. A couple other ones quickly here. We'll try to get 2 or 3 more in before our next break here. CVS. So we've got CVS trading up $1 here in the pre-market, actually up $1.50 now, getting a lift here. So, and you know what? I just want to stop with retailers, and CVS isn't the retailer I want to focus on. But let's just go on a tangent here. Did you see Kohl's and Macy's? Well, mainly Kohl's, Nordstrom yesterday, shrugging off the Trump tweet. Nordstrom got a nice pop. Kohl's got a nice breakout yesterday over 40, and Macy's got a little bit of a lift as well. And don't call it a comeback, but these big retailers are starting to look a little bit more attractive all of a sudden. They're looking potential bouncy to me. What do you think, Joel?
They do this on so many occasions. They get killed, they form a little bit of a bottom, then they rally, then they have earnings, and they get killed.
And then they get earnings. When the fundamental information comes out, they get killed again.
Yeah.
And they're coming for all these. Remember, retailers report late, so within a week or two, we're probably going to start hearing from some of these big box retailers.
You had a lot of chances here. I mean, it gave you a bunch of lows. I'll just go with Kohl's here. You had a bunch of lows under $40, 38.5 looked like the area they were targeted. Started to move up. Trading flat here in the pre-market, 41.22. I don't know if you're a scalper, trader, whatever, but the next level after that is your February 3rd high of 41.70. Clearing 42, big gap above 42, not much up to the $44 level. Just wanted to make a comment on Macy's here. You get the rumors of Hudson Bay buying it. Nothing, get a nice pop, almost filled the gap from earnings. But then nothing. If you're playing these kind of stocks on the rumors and things like that, I mean, you want to see, okay, they're in talks. It seems like if you don't hear something within a day and a half, real quickly they kind of wither away. But Macy's,
I don't know if there's going to be anything to that. Like, if I'm Hudson's Bay, am I really coming in here? And Hudson's Bay, like I said, already has their own troubles. We said this on the day of the rumors. It's come down a little bit since then. That being said, it was a nice candle yesterday, Macy's. We're just looking at it from a technical perspective. And if rumors start here again, this thing could be at 35 in a hurry. So I don't mind it here. I mean, if you take out, let's just say we'll set up a trade here. So stop yourself out, $30.81, which is yesterday's low, and say, maybe we get some follow through here today. Start taking out yesterday's high. Maybe I'm going to buy it through. If we can take out 32, and let's just go look at the buck because it's such a big number there. Maybe there's something at 32. So I'm going in, opening my NYSE open buck. Looking at the buck,
I don't think there's
$32.
I don't.
No, there's nothing there.
Yeah.
There's nothing there.
And the reason
anyway, we get above 32. Yesterday's high. Maybe we make a little run here, and that the retailers are starting to look a little bit more loud. Maybe get a little earnings season run for them. I don't mind Macy's here. Not long term. This is not a long term trade. I don't like it long term. I don't like any of these box stores long term because I think there's some cyclical changes here happening, long term changes. But short term here, I could see a bounce trade in this.
Yeah, 32.15 was your 2-day high, 31.98. So significance of that $32 level, 32.79 is your 3-day high. The only little problem with this one on any kind of real I mean, you do have some people caught there in the rumor mode, so they might be second guessing those purchases. Let's go with a big beat here, and that comes out of IMPV. Spencer's, you got the number on that one?
I do. Give me 1 second to get it up, though. IMPV. There we go. Q4 EPS 32 cents versus a 3-cent estimate. Revenue 78.4 versus 70.6. 4.2. They also see their Q4 revenue at $67 to $69 million. That's a little higher than the estimate. The EPS of a 6-cent loss to a 2-cent loss, that's a little higher than the estimate. The fiscal year revenue at $316 to $319 million, that's higher than the estimate. And the fiscal year EPS at 31 to 34 cents, that's higher than the estimate. So they beat across the board on the guidance.
I don't know anything about this company.
All right, I just real quick, you got to pop to 48 here, folks. Look at your daily charts. I don't have time to figure out where that exact gap is here, but all the way up to 48, you had a gap down that was probably on earnings as well here. So pre-market high could be in, filling the gap. A lot of people will probably be glad to see it back at this level. 8:35, and we're going to bring in our final guest of the day, Brad Thomas. He is editor of the Forbes Real Estate Investor at iREITinvestor.com, lifelong student of Benjamin Graham, and he wrote a book on the Donald a few years ago. We'll get Brad's thoughts on the real estate market as well as the new administration. We'll be right back. Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by Benzinga Pro. I'm your co-host, Joel Elconin, along with Dennis Dick and Spencer Israel, who's trying to hunt down Mr. Brad Thomas at the moment. But we're going to cover some more earnings stocks. Viacom. What do we have on Viacom?
We got Q1 adjusted EPS of $1.04 versus $1.18 in the same quarter last year. Sales of $3.324 billion versus $3.18 billion. So they beat slightly on that. There was a report in the Journal either this morning or yesterday that said Viacom, as part of their strategy, is going to refocus on 6 core networks. Of course, Viacom has like 20 networks that they own. They're going to refocus on 6 core networks and cut expenditures to the other ones, and those 6 include, off the top of my head, Comedy Central. I don't even remember them, honestly, but it was 6 core networks, and they're going to like stop spending as much money on like TV Land and all the other ones that they don't care about and no one watches.
Huge company with a lot of dying businesses. They need to do some, obviously some creative activity here in Viacom, try to get growth going again. But that being said, the stock has been on a little bit of a comeback trail. I mean, everybody was throwing this out, but we've seen a lot of stocks, towards the end of December, we saw a lot of stocks bottom. Trump turned around a lot of these stocks, and, Viacom has been $34 back in December. Now you're looking at $45, a pretty impressive run. Talking about a 30% run here. So am I coming in Viacom today? I think you're late to the party if you're coming in it now. The buying opportunity was when everybody was throwing it out back in December. Now it's up 30% in 2 months. It's a little bit too long to chase. And if you go out to the weeklies and look, I see a lot of overhead supply up here about that $45 area. Looking back in the mid-2016 in the summer, we got to 46 multiple times and failed up there. So I feel like you're late to the party if you're coming in Viacom now.
They got to print in at $47.50 because Dennis didn't have an offer in at $47.
I haven't sold at $46.50. Got to wait for me to wake up.
46.69. That was your high back in July of 2016. I would not be surprised if this thing gave back a little bit of the current gains. Need to get down to 42.50 to fill the gap from yesterday. So just depends if people are looking to ring the register here. But Dennis, I want to congratulate you on another incredible call yesterday in
What's
the
that?
House of Mouse. You said you thought it would go up, and it went all the way down to 105.50 in pre-market trading. When you came on the show, it was struggling at the 109.50 level, and you said you would not be surprised if it went up and tested the high of the move. It got
Yeah.
up to, did it get quite up there? Or did
No, I'm 50 cents short. I would have loved to short it up there. Right in that opening bar. And this is why, I specialize in the first 15 minutes of trading because you have a lot of inefficiencies. You have not a lot of liquidity in the book, so you can have major moves like this. Disney opens up at 109.50. Within like 10 minutes, it's trading over 111. I would have loved it to get up to the 111.9 because I told you there was a seller at the point up there at 112. We've been talking about it. And those big sellers, act like roadblocks, especially in the first 10 minutes of trade because there's not anybody coming out with 100,000 to buy at that point in time. Didn't get up to that level, though, and I'm cheap. I didn't, it's short at 111.49. Should have been, sitting out there and getting a little bit on maybe, and maybe scaling it up to that level there. But hindsight's 20/20 here. It gave it all back afterwards. But funny things can happen, and you get your orders out there, and sometimes you can get out even on a bad report because liquidity is low in that opening 15 minutes.
All right, we're going to take a quick break, and we got Brad Thomas right now. So we'll be right back with Brad Thomas of iREIT Investor talking all about REITs this morning.
keep it out 109 area at Disney? The last two lows, 08.77 and 08.98. Welcome back, traders and investors, to Benzinga's Pre-Market Prep. We are on the line with Brad Thomas. He is editor of the Forbes Real Estate Investor at iREITinvestor.com. He's also an author and author of The Trump Factor that came out in October. What timing for the release of the book? Tell us about it and tell us how the sales are going.
Sure. No, sales are doing great. Obviously, Donald Trump, I met Donald Trump 4 years ago. So this book started, about 3 years ago. And, it took me about 3 years to research all of the properties. I visited every property that, the Trump organization owns in the world. So really put together, a granular book on Donald Trump's net worth and how he accumulated his wealth.
All right. And how is his business tactics going to, parlay into helping the United States of America?
Sure. Well, obviously, I never knew Donald Trump was going to win. I had a pretty good, feeling about it. But now that he's won, I'm actually working on a second book, just really focusing more on some of the business, skills that I've learned over the years being around Donald Trump and his people. So I think absolutely. I mean, I think America voted for a businessman. America wanted a CEO in the White House, and perhaps the first ever. And so we're obviously seeing this now. I was at the inauguration. I was also I was there at election night in New York City. And so it's really been interesting kind of watching things starting to unfold. It's no surprise to me that we're seeing him, run this country like a business, and where it comes down to the people that he is appointing, to some of the executive orders that we're seeing now put in place. So, just a couple weeks into it, I mean, and none of this is a surprise to me. It may be a surprise to some people, I'm sure, but it is no surprise to me having been around Donald Trump for such a long period of time.
Brad, let's jump over into where your specialty lies here. And you're obviously right about REITs, both publicly traded and non-traded REITs. That's a nice alternative investment. I mean, this is something that a lot of investors do not focus on. They want to focus on the growth stocks. They want to focus on the other things. But adding a few REITs to your portfolio can really help out, to smooth your earnings curve here. Talk about, REITs in general, and then maybe, jump into a couple that maybe you like.
Sure. Well, you mentioned one thing, alternative, and I really would argue that REITs aren't an alternative. I think, as of September of 2016, September 1st of 2016, the equity REIT sector moved over from the financial sector into their own classification within the global index investment system, the GICS, which is how S&P, categorizes stocks. And so now we have REITs in their own sector or classification, and so that proves or validates the point that REITs are not really an alternative. They're really a core food group, and investors should really look at them, and analysts and financial advisors should really look at REITs as a core food group, not just the dessert on the meal, but a core part of the investment menu. And so REITs have performed well. I mean, when you look, REITs started in 1960, so we've got over 50 years of history that we can look back now and see how REITs have performed compared to all the other alternative asset classes, MLPs and BDCs, which are other dividend-paying stocks. They don't have the history that REITs do. So we've got a longer time period where we can look and reflect on how REITs have performed. And if you could go back and look at it just about any time frame, REITs have performed well, even through the Great Recession, when a lot of REITs did cut their dividends. Majority of REITs cut their dividends. They have performed extremely well, coming out of the recession, and really we're still riding, I think, the tail end of this bull market. I think now that Trump's in office, we believe that this is going to extend the real estate cycle maybe another year or two, and so we still believe it's really a good time to be investing in this particular asset class right now.
All right, in the chat here, we got a question coming from Fuzzy NLY. I've seen this one trade before. It's quite a wild child. Any comments here on Annaly Capital Management Inc.?
Sure. When you said Fuzzy, I was going to guess that was going to be Annaly. So, these mortgage REITs are tricky. We cover mortgage REITs, but we really cover the preferred shares. We just, a lot of my followers and subscribers to my newsletter, we're value investors, and we don't really market time stocks. Annaly is up and down and all over the place. These mortgage REITs are really hard to figure out, and you really have to time these stocks. And we're just not market timers here. I mean, it's just we're value investors. Just wrote an article, by the way, proving that point. I went back through as much data, as long as I had data, I think through 1970, comparing mortgage REITs to equity REITs, and every 5 and 10 year period, equity REITs outperform mortgage REITs. It's the numbers don't lie. And so Annaly's a tough deal. I mean, you can make money on a short-term trade, but I think you're much better off investing in equity REITs and preferred shares, which we believe are much safer for income investors.
Are you talking the preferred shares of like the mortgage REITs, or are you talking like preferred shares of banks? Because the banks have a lot of preferred shares out there. When you talk preferred shares, which preferred shares are you talking about?
Sure. So we've covered specifically REITs, but my partner, Michael Terry, who really writes my preferred, we've got a preferred portfolio, REIT portfolio in our newsletter. We do touch on utilities and banks and some of the other, other sectors, but specifically, I mean, REITs, preferreds, we really feel like that's a very stable, asset subsector. In fact, I just wrote an article yesterday called a REIT preferred portfolio for Mom. I've started to build my mother's investment portfolio for retirement, and I actually wrote on that subject yesterday. We picked a few companies that we feel like were good preferred holdings. We like to say 10 to 20% of the whole REIT portfolio should be preferreds. At least that's what we recommend. But yeah, I mean, again, mortgage REITs, we do like mortgage REITs because they are stable. They are, top of the capital stack, safer for investors. Obviously, the income is not as volatile that you see in the in the equity side of the capital stack. But most of our emphasis is on the equity REIT preferreds. Commercial mortgage REITs, which is somewhat of a hybrid, we cover those because that's really commercial real estate. These guys operate like banks. So you've got Blackstone Mortgage, you've got Starwood Capital, Starwood Property, you've got Ladder Commercial. So we cover 6 or 7 commercial mortgage REITs that lend money on commercial real estate because we understand those fundamentals a lot better than we do the housing market.
All right, Bob Wire, he likes REITs preferreds. He's looking at the one here of CIM, that's Chimera Investment Group, and man, I'm looking at a monthly here. I don't know if they had a reverse split or whatever. It looks pretty steady here as of late since the financial crisis. Any comments on the preferreds of Chimera Investment Corp?
I think we've got that one in our portfolio. I don't have that in front of me right now. I'm actually down in Florida attending the Money Show today, but or this week, I should say. But yeah, I mean, that is a preferred. Again, the equity side is a little more volatile. That whole area. I mean, we just can't put our arms around it. But I think we do have that preferred in the portfolio, if I'm not mistaken.
All right. Before we let you go, just a general thought here on the IYR. That's the REIT. REIT for real estate, kind of holding steady here. And while you give the comments on that, I also want your comments on the interest rate environment here. Looking for a couple bumps here, perhaps in 2017. You think that's going to hurt the performance of REITs?
No, not at all. I mean, look, it's already seen. If you look at last year, the performance last year through the first part of 2016, REITs performed really well. I mean, we were really doing well. Then in the third quarter, we just had we got beaten up again. I mean, we had more of this sell-off due to the fear. Again, this is the fear of rising rates. So even before rates were increased for the second time last year, we saw this sell-off. So we've seen, looking back at the timeline since 2013, May of 2013, when Ben Bernanke started to remind us that rates were going to be increased, we saw how REITs have been really punished irrationally. So what we're expecting this year is not as much of a sell-off. I think most of this has already been priced in. The market is expecting, rates to increase. And I think the biggest misconception when it comes to at least REITs or real estate and rising rates is that that's actually a good thing. And rising rates is going to help. It proves that the economy is performing better, and it's going to, bottom line, it's going to put more income in companies' pockets. Combine that with Trump's, tax cuts. I think both of those were going to really be catalysts, for shares to grow, because when rates increase, rents are going to increase across the line with most all property sectors, from shopping centers to industrial buildings, et cetera. And so when rents go, that means dividends, earnings grow, and then dividends grow. So as long as dividends keep growing, then we're going to be happy. And I think REITs are going to perform extremely well. So we're looking for a pretty good year. Growth this year, we're targeting 7-8% earnings growth this year. It's not. We're not talking about hitting the ball out of the park, but all I'm talking about is we're going to hit singles and doubles, and dividends going to keep growing, and investors going to keep compounding their investment accounts in REITs. And so we would recommend 10 to 20% allocation in a portfolio to REITs.
All right, we've been on the line with Brad Thomas, editor of the Forbes Real Estate Investor at iREITinvestor.com, and also author of The Trump Factor. Great input, Brad. We'll speak to you again soon.
Sounds good. Thanks so much.
All right.
Thanks, Brad.
All right, his website is theintelligentreitinvestor.com there, Bob Wire. Dennis, any comments on the REIT market?
Just great diversification. I mean, I'm a big fan of preferred shares. I don't go so much into REITs, although I do have a couple in my portfolio. But, I love preferred stocks. And if I look at my invest portfolio, I've never, I should sit and analyze a little bit further, but I don't. I kind of just throw a bunch of stuff in there that I like. But, I probably 30% preferred stock, maybe even more than that, 35% preferred stocks. And I've talked about these in the past, and I love getting, paid. Some of these have 6, 7, 8% dividends. And, the preferreds are, safer than the Viacom, and so that's why I really do focus on preferred shares there. And it's paid me for a lot of years. I've had preferred stocks in my portfolio for 10 to 15 years, and obviously those dividends over time start to add up, and it's a nice way to get some yield from your portfolio. So it's nice to have growth, but it's also nice to have income.
All right, Twitter bounced. It's got a little bounce above 17 here, back under 17. We'll see if we get back down to that pre-market low. I think Dennis and Sean and I'd like to see it in a lower 16. Dennis has his bid at a penny.
$14. I think I'd buy some if it got down to 14. I didn't get in there today, but over the course of time, I just said, I've already said for a while, I think Twitter's just a valuation issue. I think it's worth too much. I think there's value in there somewhere. 1683 is still a little bit too pricey for me.
All right, have we covered all the earnings from today?
There's been quite a few. Let's go to the imbalances here. There's a few interesting ones. Twitter's 284,000 to sell. It's going to continue to grow. It's already traded 8.3 million, so it's going to be one of your big sell imbalances of the morning. Coke's 130,000 to sell off its disappointing earnings report. Alibaba 52,000 to sell, so that is looking actually flat here right now, but there is a sell imbalance, so keep note of that. Morgan Stanley, the banks. We haven't talked about the banks. The banks are strong here this morning, even though some of your European banks are a little bit weaker here this morning. Deutsche Bank trading down, Credit Suisse is trading down here in the pre-market, Barclays is trading up. We got Morgan Stanley with 118,000 shares to buy, and it's trading up 30 cents in the pre-market. Bank of America 37,000 to buy, it's trading up 15 cents. Goldman Sachs is trading up over $1 in the pre-market. Wells Fargo is 58,000 to buy, it's trading up 30 cents here in the pre-market. So the banks a little bit, and maybe after yesterday they got hit a little bit, maybe there's some investors coming in here looking at the dip as a buying opportunity, because we are seeing a little bit of upward pressure in the banks here this morning. The market is mixed. It's a very mixed market. You know how I always come in. I like to say, are we risk on or risk off? We're pretty flat. The banks are slightly higher here on the day. You got some of the defensive issues, down. Maybe Coke's, weighing on that a little bit there. So I'd say it's slightly risk on today, but not very, not a lot of conviction in that, because we can, flip around here. It's actually a very difficult day. These are the hardest days to trade. The days where you've got the S&P futures flat and you just got a mixed bag where there's some stocks strong, some stocks weak. If I'm looking overall, I'm seeing a little bit of strength in the banks, though, and a little bit of weakness in some of the defensive sectors. Sometimes I like to look at the TLT to get a feel for stocks that are defensive, and the TLT is trading down here, so that makes me think stocks, with the yield, the utilities, might be a little bit weaker here off the hop.
All right, Duncan reported this morning here.
It did.
Yep. Trading up. Spencer, you got the numbers, and it'll be our last issue of the day.
I do. Duncan, Q4 adjusted EPS 64 cents versus 61 cents. Sales of $215.7 million versus $215.5 million. They're also raising their quarterly dividend from 30 cents to 0.3225 cents per 32 and a quarter cents per share. I don't know why I said that way. Dunkin' is up, and Yum Brands is up. So apparently people like their donuts and their fast food more than they like their Twitter.
Right. You did get a pop in pre-market trading. You got the 53.36, and that's a number to keep an eye on here, because you had a high at 53.14. Above that, 53.50 area. Dennis, any comments on Dunkin' Donuts?
You had a breakout yesterday. People may be anticipating, and they were anticipating correctly there. But then you start looking, there's a lot of overhead supply up here. You had an entire month of November and December trading up in the 54, 55, even snuck up to the 56 area. So it gets a little more tough sledding once you get above 54.
All right, and I just got to get a big thank you out here to Larry Glickman, who just made a really nice comment in the chat here. This show saves my morning. Thanks. Only real information is available. Thanks a lot, Larry. We're going to wrap things up. Spencer, what's on the docket for the final day of the week?
Got a couple of really good guests tomorrow. Dennis, you're going to love them. So first, we got, Dennis, this is for you, Adrian Ficini, head of product management at IEX. So get your market structure hat on, Dennis, because we got a good one for you there. And then at 8:30,
market structure hat on.
Okay, yeah, I shouldn't have given you that much warning. 8:35 tomorrow. Michael Hewson, chief market strategist at CMC Markets from across the pond. Always love talking to Michael. So Adrian Ficini and Michael Hewson on tomorrow's show. If you missed any part of today's show, including our chats with Sean Udall, Brad Thomas, and Michael Lamott, you can catch the whole thing. You can just rewind it on the on YouTube Live right now. You can listen to the podcast on iTunes, SoundCloud, and Stitcher. Please always remember that all the information, material, and content from our show is for informational purposes only and not meant to be investing advice. That's it for us today. Hope you enjoyed the show. We tried to cover as much as we could. We'll be back with you to cover even more news tomorrow at 8 a.m. Eastern. Have a good day, everyone.
Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need Thinkorswim. To experience everything Thinkorswim has to offer, open a TD Ameritrade account today. Thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks.